Hi, I'm Ian Howe. I work in the banking and fintech sector at CRIF, helping organizations to leverage data, analytics, and technology solutions to transform digital decisions. ESG and protecting the environment is the number one priority of many major businesses today. However, for boards, it's one of the most challenging to understand and implement. A recent supervisory review highlighted that 96% of banks have blind spots in identifying risk, and over half of banks have failed to implement effective practices. It recommends that more granular data can be used to fill in those gaps, and that more sophisticated methodologies could be used to model risk. With an increased regulatory focus on ESG and awareness from green conscious consumers, boards are increasingly looking to accelerate their ESG strategies by using data and analytics from fintechs such as CRIF to better understand how compliant the companies, the customers or suppliers they work with are with ESG principles. From the data insights on risk concentrations, banks can make informed decisions on ethically led growth, product and procurement strategies. ESG is not just about compliance and flagging risk, it also creates tangible benefits and growth opportunities. The World Economic Forum predicts that the global green finance market is expected to reach 31 trillion by 2033. Also, our own research as part of the Banking on Banks report highlights that 2/3 of consumers consider transparency and sustainability as key factors when choosing who to bank with. CRIF's new solution helps banks to understand the ESG implications of working with certain businesses and enable them to make more informed decisions so that they can identify and work with the most sustainable and ethically conscious businesses, as well as opportunities for developing new green financial products and improving their competitive edge. In addition, our solution helps organizations fulfill reporting, compliance requirements for stakeholders, investors, and regulatory bodies. There are many great companies providing ESG data insights, but many of these only cover a few KPIs in specific niche areas. The key challenge, therefore, for businesses is integrating data from multiple providers to create a holistic view of ESG risk. So banks have the procurement challenge of managing, contracting and onboarding data sources from many suppliers. They have the analytics challenge to understand raw data, how to translate it into insights and how to derive models. Also, there's the IT challenge to match, monitor, and also enable action on the ESG risk factors. So this is where CRIF's ESG analytics helps UK financial institutions to gain a quick and accurate picture of the risks and take immediate and effective action to inform reporting, credit policy, and also product strategy. With just a company registration number or address, a data lake provides a suite of 130 KPIs covering greenhouse emissions, looking at scope 1, 2, and 3, physical risk, looking at acute and chronic perils, transitional risk, modern slavery, inclusiveness, as well as some of the social factors such as health and safety. So the output can help banks by supporting them with non-financial disclosures, regulatory expectations, and also climate scenario stress testing. CRIF has been active on ESG working groups over the last 6 years, gaining first-hand experience with authoritative data sources covering key ESG dimensions requested by regulators and international guidelines. And this experience underpins the data and the analytics used in our ESG data lake. The completeness and alignment of data across the EU and UK provides a holistic view of ESG risks that facilitates comparisons across geographies and also benchmarking across sectors and against peers. Another key feature is the granularity of our data. Our physical risk KPIs go down to, in some cases, tens of meters, such as for flood risk. So it provides a much more accurate view of portfolio risk and enables organizations to drive more informed ESG decisions. And finally, the raw data is transformed into KPIs and scores that enable businesses to make more informed strategies based on the ranking of risk.